today we are going to be making a video which I'm going to be explaining my trading strategy. Which, well, I don't exactly use this exact trading strategy with my personal trading, but this is part of my trading strategy. I use this trading strategy as part of my major trading strategy. Okay, so just to go over what we learned last video, which I uploaded a while ago. We learned basic forex trading and what it is and why I trade forex and why you should trade forex too, and what forex is, why you trade it, and blah 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 blah. Go watch it. It's on my channel. This video I want to explain my full rundown on how I take trades. Okay, this is gonna be our analysis on the Australian dollar, US dollar on the 1 day time frame. Okay, we're gonna go on the 1 day time frame. And we're going to be talking about two of these indicators, which I'm going to be talking about shortly. We're not going to worry about it right now. Now, as you can see here, we have our setup, okay? We have our setup, and this setup is basic chart patterns. What it is we have rejection, 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 and on the top we have rejection, rejection. So what this basically means is that we have resistance here. This is resistance, and we have constant upward push, right? We have constant upward push. Now, from what I can see here, okay, from what I can see here is that we had a divergence here, which is why we went up. Divergence, I'll explain in another video. It's too long to explain, you know. So we had divergence, which is why it went up. And here, which so I'm guessing, I don't know, because it's on a replay mode, right? Which is 31st December of Thursday, 31st December of 2015. So I don't know what happened there. So I'm guessing it's a divergence. I don't know. I'm guessing. So, so to explain my basic analysis here, we're gonna draw some zones. This is our resistance point right here. We have resistance. Price is resistance, right? We have our resistance. Okay. We have a strong resistance here. Price is not moving out of this zone. Every time it comes to the zone, we have a rejection, which is what the red crosses are, right? Rejection. So we have a resistance here. Now, we want to see if we can break the resistance. So as we can see here, price is constantly moving on an upward trend. We have more rejections and we have higher highs and higher lows, but we have resistance here. They're not higher highs, they're higher lows though. So we can expect price to go up. I'm expecting price to go up, okay? Price is going to go up. But we don't know if price is going to go down and take us out before we go up. So we're going to want to play this smart, okay? We're going to want to play this smart. We're going to have this setup. And by the way, strategy, just because I'm on the daily time frame, don't think you're going to have to trade on the daily time frame as well. This strategy works on any time frame, okay? On the 5-minute, 30-minute, 1 hour, 4 hour, daily, any weekly, any time frame. It doesn't matter what you trade or where you trade. It works on anything, any time frame. And this is a simple strategy. I just trade break and retests. I teach that to most of the people for beginners, and so this is a pretty simple strategy that I teach and works everywhere and every time frame. So just understand what I'm telling you. So before we actually look at this, we're gonna look at price action. Okay, we're gonna look at price action real quick. So what price action means is okay, so this is what a real chart would look like. Okay, and I'll show you the real example shortly. And this is bullish. Just, I'm sure everyone would know this is bullish because it's going up. Okay, this oops, this is bearish. Okay, I'm sure everyone would know that too. Okay, this is bearish, this is bullish. Okay, the main difference between these two are the way this is. Okay, so for the bullish chart, for the bullish line graph, we can see that price is going from here. Price is going, making a higher high, higher low. This low is higher than this low. Higher high, higher low, higher high, higher low, higher high, higher low, a lower high, lower low, and a higher high, higher low, higher high, higher low, higher high, higher low, and higher high, right? And then we can have pull back in. So basically what this is price action, okay? This is basics of price action. If you understand, this is very simple. We have an impulsive move and we're always going to have a retracement. Remember this. It's like a thumb rule. Whenever we have an impulsive move of price moving upward, we're always going to see a retracement. So impulsive move, retracement, 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 so on and so forth. So same way, we're going to see this for the bearish structure as well. We have downward retracement, impulsive move. This is impulsive move, retracement, 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 so on and so forth. Pretty fair and understandable. Just remember impulsive move and retracement, okay? Now we're going to go on the real charts and we are going to see this example on the real charts, okay? Let's go on line graph and let's see. Okay. So on the line graph, and let's see. So it's basically the same thing, right? It's a little bit more confusing, to be honest. And so to mark this, we have our impulsive move, retracement, 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 so on and so forth, all the way down to everywhere. It's just like that. If it's going up, we have an impulsive move, retracement, impulsive move, retracement, impulsive move, retracement, so on and so forth. When it's going down, same thing, impulsive move, retracement, impulsive move, retracement, impulsive move, retracement. It's just like that, right? So I'm sure you guys understand what I'm saying by now. And so let's go back to the candles and zoom in just a tiny bit. So as we can see here, we can see that price had an impulsive move, retracement, impulsive move, retracement, impulsive move, retracement, impulsive move. This is the type of time to scalp it, okay? You have to scalp it here. Here, I could have taken a long position right here. Right? Right here, I could have taken a long position and won that short money right there. Short money right there, okay? And then I could have taken a short position right here. We can see a retracement. Impulsive move, retracement. I could have gone short here and taken a trade here. So just to basically give you an idea of what impulsive move and retracement looks like and how you could use it, right? So these are quick scalps on a 5-minute time frame. You could go on a 5-minute time frame, find this exact structure, find out impulsive move, retracement, impulsive move, retracement, and next impulsive move you can be ready for and you can take a long position. Anyway, so now we're going to be doing the same thing, but we're not going to be scalping here. We're going to be long-term trading. So now we can see we have an impulsive move, retracement, impulsive move, a pretty long impulsive move, and a pretty long retracement. Again, impulsive move, pretty long retracement, impulsive move. We're not done the impulsive move, I'm guessing, because as you can see, look at the candlestick. Look at the candle. It's in the middle, right? So this just tells me that price is very, very weak here. There's more sellers. As you can see, the wick on the top is a little bit longer than the wick on the bottom, but basically the buyers are showing enough work as well. So price is gonna go down just a tiny little bit like this, and then it's gonna move back up. So anyway, we're gonna wait and play it out just a tiny bit. Okay, now I was wrong. Price had a huge bearish push, but then as you can see here, we had this huge wick right here from the bottom to the top. We have a huge wick and a smaller wick on the top. So now we can expect price to go up from here. Our rejection here is a bit little bit further top. Okay, now what did I just say? I said price is going to go a little bit up. But what happened? Price went down. This is why you have to wait, and you don't just take trades just like that, right? You don't expect, you don't think, okay, price is going to go up now. I'm going to take a long position. If you took a long position, if I took a long position here, right, and I had my stop loss like here, I wouldn't have lost that much money, but still I'm losing, right? It's a losing trade. So you don't want to rush into trades like this just because you look at price action and you think, okay, I understand everything and I'm just going to take a trade. No, it doesn't work like that. So this is an impulsive move. This is the retracement, right? The retracement is a little bit longer than the impulsive move this time. So we're going to expect price to move to a bearish structure because the retracement is longer than the impulsive move. When we have a retracement, this is a very important rule, okay? When we have a retracement that's longer than the impulsive move, for example, here, this is the retracement, this is the impulsive move. The retracement is longer than the impulsive move, which this tells me that price is going to go on a bearish structure. So now I can confirm and take a short position trade. However, I'm not just going to do that. I'm going to wait for it to play out just a tiny little bit more because we have had rejections whenever price comes here. So this might just go back up and go up, but we don't know. Price might just end up going down. So we need one more candle to confirm. Now we've had a confirmation candle right here. This candle tells me that price is definitely going on a bearish structure. Now I can use my two indicators that I was talking about before to understand if price is going to go down or up. If I go on the indicators, look at these two on the bottom. Moving average exponential and the 3 moving averages by Advent Trading. Download this one. Add this one to your charts. This one by Advent Trading. Okay, you go on the settings of the 3 moving averages, and on style, you put your moving average 1 to one color, moving average 2 the same color as 1. But the moving average 3, you're going to put it to a different color. It doesn't matter what it is, but the first two are going to be the same color, and the last one is going to be a different color. And then these are the settings. First one is 13, second one is 21, and the third one is 55. The 55 line is the blue line here on the chart. The blue line is the 55, and the other two are the black. The 13 and the 21 are black. Click OK. And then the next one, EMA, you're going to go here, and inputs, you're going to put length as 8, source as close, offset to 0, method is SMA. You have a bunch of things, just put it as SMA or EMA, it doesn't matter. I would suggest SMA, length to 5, and then time frame, just click on chart because you don't want it to be a specific time frame and you're on daily and it's on 1 minute and it just doesn't work that way. So put it on chart, and it'll, whatever your chart is at, it'll just adjust to that. Click OK. Now, as you can see, how this indicator works is these two work hand in hand, and whenever price crosses this, whenever the blue line crosses the 3 black lines, price goes up. Whenever the blue line crosses the 3 black lines, price goes down. So whenever the blue line is on top of the black lines, price is going down. Whenever the blue line is on the bottom of the black lines, price is going up. Another major thing that you have to understand is that not every time the blue line crosses it to the downside, the price is going to go up, and not every time blue line crosses to the upside, price is going to go down. There are a few tactics that you have to understand, and I understood it a little bit later, but I'm going to tell you guys what it is right now. Whenever the three black lines are together, like over here, for example, this one right here, all the 3 black lines are together. It's very congested, it's very compact, and the blue line crosses it, then you can expect a huge reversal to the downside. But whenever the black lines are kind of like segregated and the blue line passes it, you can expect price is never going to go up for sure. It might come down. Whenever it's together, like here you can see it was kind of together, but then it was like it's better than this, it's better than this one, so you can see a little bit more of a downside to a little bit more of a bearish pressure here. But then here, price is crossing it at a very good time. All the black lines are together here. As you can see right here, all the black lines are together. You can't see them separately like this or like this. They're together here. So here I know that price is going to go down. So now I'm going to take my short position from right here, okay, down to here. A quick scalp, okay, it's not going to hurt, quick scalp. And we're just going to have it to our previous low. So right there, we're gonna have it respect these lows, so right here, okay, and then we're gonna expect a reversal, but I'm gonna tell you why in just a second. Okay, now let's play it. Winning trade, take profits, and don't trade now because you want to wait. So this trade ended up in a win. Awesome. So we won that trade, we got our profits. Good. Moving on. Next. Now, what can we see here? Here we can see that price is kind of very weak in this point, right? Price is kind of very, very weak in this point. Okay. And then we have our bullish pressure. It's very good because as you can see, it's a shooting star upward shooting star here. And so here I know that this is my confirmation candle, to be honest. I'm going to take my long position right after it passes this zone right here. Okay? And I want to make that very clear because I'm not just taking a trade right here. I'm waiting for it to cross these highs right here. As you can see, these highs in the middle. So let me just delete that. These highs right here, these highs, okay? So when it passes these highs, you can understand that price is going to go up. So I'm going to put my long position right here and see what happens. And I'm going to expect a breakout from the structure. And our stop loss is going to be right there for now. And then we can reduce our stop loss right after this. So we're going to see if it works. And also our take profit, as you can see, is right at this level. Right at this level. Price respects major key levels, right? And we don't want to risk it to go up here. So we're just going to play it safe. Again, playing it safe is very important trading, okay? Over here, and then you're going to want to see if price goes there. And let's look. Price is smoothly going up. I'm just going to expand this a little bit. What just happened? Price broke out of a resistance. Why? Because we've had two rejections. Two rejection, third rejection, price goes up, okay? Most of the times that's what happens. We're just waiting and seeing how this plays out. And we won our trade right there. So that's our trade. We won that trade. Okay, it didn't even go to the downside except for these two times. It basically just hit our take profit very nicely, very smoothly, and that's our trade, right? And we took our short position, so we basically had two trades here. We took our short position right around there, I'm pretty sure, and we had our win right there. I think, I am not very sure, but we did have a short position trade that we won right around over there. I don't know if this is exactly it was, but it was right around over here, and we did win that trade. So we basically won one trade, and then we won a huge big trade, a second trade. And so as you can see here, price crossed this and it went up, and price crossed this and it went down, right? So that's basically it for this video, guys. I mean, like, that's basically my strategy. This is part of my bigger strategy. I might upload my bigger strategy later on, but this is part of my bigger strategy. Anyway, this was a beautiful trade, and I would have taken this trade, but you know, this was back in like 2016, and I wasn't trading back then, so missed this good opportunity. But anyway. This was a good trade and this was a good video. I hope you guys understood what I'm saying. And obviously you have to watch it over and over again if you want to really understand what I'm saying, and don't really skip around because you have to understand fully what I'm saying in order to apply my strategy. You can't just apply it without understanding it. So anyway, thank you so much for watching my video, and I hope you guys enjoyed it. Catch you in the next video.